It's time now for a look at the local and U.S. market news. I have Daniel Yoo, that is, at Yuanta Securities, live on the line. Mr. Yoo, welcome back.
Hello.
Right, Mr. Yoo, Wall Street closed slightly up on Monday after surrendering much ground at closing bell last Friday. Do fill us in on the latest in global markets.
Yes, if you look at the Dow, it has added about 200 points on Monday, while the S&P 500 and NASDAQ rallied around 0.7%. as the deep buyers emerged after quite a bit of a sell-off that happened last week. As you know, continuation of monetary policy tightening and also high level of inflation pressure is causing the uncertainty about the global market, particularly U.S. as well. Dollar continues to strengthen as the interest rate hike is expected on the 21st of September, which is on next Thursday, Korea time. So clearly, these kind of tight monetary policies causing uncertainties, and people are worried that continuation of rising interest rate means quite a bit of a significant economic recession that might happen in the near term. If so, then people have been continue to be worried about the earnings of the companies to be quite weakened in the future, and therefore the market might be falling further, and that has been the continuation of uncertainties. However, though, we need to watch out how things will play out as the inflationary pressures are coming down quite rapidly in various areas. But of course, still the housing sector and mortgage rates and all that seems to indicate that the inflation pressure is still persistent. So we need to watch out how interest rate is played out, and also how the inflation pressures are coming down, and also what that means for the economic conditions. As long as the economic recession doesn't happen, we think that the market is in good position as the already a lot of negative news is priced in. But if the continuation of inflation happens and the rates are rises above 4% to maybe even 5-6%, then the level of the recession will be quite severe, and earnings will be quite weak, and therefore the market could further fall. So for the time being, we are watching carefully what Fed might do on the 21st of September.
Right, and against that backdrop, the Korean bourse also regained ground on this Tuesday. Mr. Yoo, how do you assess the local stock market performance?
Yes, today Kospi is up 0.5% to 2,367.85. Kosdaq is also up 1.12% to 760.35. In terms of the direction, obviously, it's quite uncertain. One day up, one day down, this kind of trend is happening. Continuation of volatility is happening. And also the index itself is well below 2,400 level, which indicates that it is a quite cheap valuation territories. In terms of the flows, foreign investors are really not doing much. They net sold about 76.9 billion won of Kospi and 46.2 billion won worth of Kosdaq they net bought, while the future side also only 42.8 billion won of net selling. In terms of the amount, is very minuscule in that it's not going to show any kind of direction for the market. But one good thing, though, is that the retail investors are the sellers, while the institutional investors are buyers. Institutional investors bought 283 billion won worth of Kospi and 92 billion won worth of Kosdaq. In terms of the sector-wise, we are seeing some interest is happening to the airline company sectors, hotel, restaurant, leisure, life insurance, and also the shipping-related side. And all that means is that quite a bit of a negative news has been already priced in for uncertainty about economic recession or slowing down of the economy. We are seeing that Korea is quite resilient relative to other economies in such that the export sectors are quite sustained in terms of the growth numbers, and also the domestic consumption has been quite weak before. Now it is in a good position to be recovering somewhat. So all that means is that Korean market is probably reasonably in a good position. Also, related country, China, is expected to show quite a bit of a recovery in terms of the domestic consumption. So Korea being one of the bigger exporters to the China consumer market, we think that it is a good position where Korea will be in a reasonably cheap valuation territories while the earnings are sustained, and therefore the market could recover in the fourth quarter of this year.
Right, and I'm sure many will keep their fingers crossed for that. Meanwhile, back in the U.S., Mr. Yoo, 10-year Treasury yields hit 3.5% on Monday amid growing fears of a global recession, aggravated by anticipation of yet another big rate hike by the Federal Reserve this week. Now, that being said, what do you believe are the risks of a rampant recession?
Right. If you look at the overall interest rate environment, as you said, the 10-year U.S. Treasury has surged past 3.5%. Right now, the 10-year is running at 3.508%. Also, if you look at the 2 years, it's already gone up to close to 4%. Clearly, that means is that a big spread between 10-year to 2 years, meaning that 2 years are higher than the 10-year, which indicates that the possibility of economic recession coming as the lending might be slowing down quite sharply. So we need to watch out what happens to the lending side. We think that the lending slowdown is not going to happen aggressively because if you look at the 3-month interest rate environment, it is at 3.35%, 10 years at 3.508, so therefore still the spread is positive. We need to see the both side of that spread going down to negative territories. After that, maybe 12 to 16 months later, market might be falling into economic recession as the overall lending growth rate slows down to the below interest rate environment. Clearly, right now is not the case. We think that economy is in a good position for U.S. where consumption can be sustained with the good growth rate in terms of credit and the lending side and credit card growth as well. So that also, if you look at the fundamentals, the net worth of the retail investors and the leverage of the retail people are quite reasonably positive. So therefore, we're not going to see an aggressive economic recession anytime soon. But if such that lending rate or lending growth rate falls to, say, 5% to 3% or something like that, below the overall interest rate environment, then we will enter an economic recession quite quickly. So we're watching quite closely on what happens to the loan side.
Right, I see. All right, Mr. Yoo, as always, thank you very much for your time and your thoughts.
Thank you very much.